The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we take a look at how the markets settled out the day on Thursday, a little bit of strength in corn and soybeans post WASDE report that largely didn't have a lot of massive changes of note anyway, but there were a few tweaks to the balance sheets. Plus, we still have all of the tariff noise and more in the background of these markets. Let's talk about it and get some perspective from a new voice here on Market Talk. He's a market advisor with Trader PhD Ag Marketing. Nick Lawrence joins us here on the show. Nick, welcome into Market Talk. It is good to hear from you. Thanks for joining us today. Hope all's well.
Happy to be here, Jesse.
Well, let's just 1,000-foot view this to start. USDA WASDE for the month of April. Didn't seem like there was a lot of fireworks, kind of a blasé type of report. It was probably like fifth or sixth on the news headline list, honestly, on Thursday. But I know the USDA did make some tweaks on the corn side of the balance sheet. Talk about that. Talk about just your takeaway from the April WASDE, Nick.
So for me, the April WASDE, I think the first thing that struck me was actually a little bit of the lack of tariff commentary. Tariff commentary was only in two sections, a little bit there on the meats, and then a little bit about biofuel feedstock import. So that struck me a little bit that we didn't get too much more commentary there. And then yes, the large increase in corn exports, that was obviously nice to see for us. And then the rest of it was mostly boring, I guess you could say, or close to as expected. Better way to put it.
Well, and you look at the ending stocks for the U.S. and that corn number coming in at 1.465. That was well off the March number. Soybean number was pretty much in line with pre-report estimates, and the wheat number was a little bit higher. Shout out to Karen Braun from Reuters, looking at her chart on our video feed. And I mean, to your point, some of those tweaks on the demand side, import-wise, crush-wise on the soybean side, but really, there just wasn't much to write home about that. It really didn't move the markets a whole lot, Nick.
Well, one little nugget, especially again on the corn side, today's adjustments, got us under, we're under 10% stocks to use, and really at 9.6 now, and we're kind of getting up to getting tight enough to where the market really does start to price ration here, and it really doesn't want to let the stocks to use get too much lower. So that's positive. And obviously we saw a follow through buying today in corn to support that.
Well, let's talk about your view on how these markets have been trading the volatility here lately. And I would say, I've said this a couple of times here this week, that I feel like the corn market, by and large, with all the tariff news and everything that's been thrown at it, Nick, is really holding up well in the face of all of this. It seems like we found a value range, in my opinion, in corn. I mean, what are your thoughts on that?
Undoubtedly, we came down, after that February sell-off, we came down and we tested the 450 level here on the May, and almost immediately retraced 38% of that. And now we're only a little less than a dime from getting up to the 61% retracement level there. So definitely seems like we're carving out a little bit of a range. I wouldn't be very surprised if heading into first notice day here for the May, after this 40+ cent run, to get a little bit of a pullback and consolidate here. But corn for sure, right? That's a strong market. And I think, like I said, the tighter stocks you show that. One thing that didn't show up in the WASDE today was some CONAB and Rosario changes this morning, and that actually is going to end up increasing global supply of corn probably on the next WASDE or the WASDE after. So, other than that, I think for now, yep, we're supported, and like I said, I wouldn't be surprised too much. A little bit of pressure here going into first notice day.
It's interesting you brought up the CONAB Rosario numbers. USDA didn't make any changes to South American production, but I think typically USDA is a little bit slower to make some of those changes and revisions to that South American production. But those CONAB numbers and the Rosario numbers, it raises a good point that if we do end up seeing some issues with safrita corn, for instance, Nick, I mean, that puts more pressure on the U.S. growing season, doesn't it?
It does for sure. With the big acres that we're going to see on next month's report, and possibly record yields. I don't know where that's going to come in at. It does put some pressure on us. I would say, though, for now, the safrina crop is looking relatively strong, just on surface level. NDVI data is strong, but if you look at overall rainfall over this year, it's below average, and their soil moisture is also extremely depleted. So I do worry a little bit that the safrina crop could go south very quickly if the rain shut off. Like I said, it's not getting too much traction right now, just based off NDVI data, but that crop could run out of gas quickly.
Nick Lawrence with Trader PhD joining us here today on Market Talk. From a risk management standpoint here in the grains and oilseeds, Nick, of course, we got to remember the risk of trading futures and options can be substantial. But now that we've gotten through a lot of key reports, we're turning our attention back to weather. We still have the tariff elephant in the room in these markets, but from a risk management perspective, as folks are getting busy with spring field work, I mean, are there any things that they need to keep in mind right now across the grain markets?
Personally, for me, especially with corn, I think we are not too far away from some targets we have to make some sales. And I think before guys get busy in the field and before we start approaching first notice day, I do think it would be prudent, especially if you have more inventory than you would like to have. Again, especially corn. I think rewarding this rally would be very prudent. Buy some calls or some call spreads, or whatever it is you and your advisor want to do there. Soybeans, to me, I still think you could almost follow the same template. It hasn't had as big of a run to reward, but I still think it would be a good idea there. Also, again, heading into first notice day, that type of thing. If we do get a pullback before we get to our more typical May, June potential rally.
And I found it interesting in the case of soybeans, obviously 2 days of a rally in the market post the 90-day pause on tariffs, even though President Trump raised the tariff rate on China. But I found it interesting that China on the weekly export sales was still the featured buyer of U.S. beans. And so, there's been rumors that that's Sino Grain, the Chinese-owned state-run facility, state-run company. But when you look at soybeans, I mean, I know for a lot of producers, this has been a tough market, and that's obviously been reflected by the talk that we're going to see a massive increase in corn acres here this year, Nick.
Yeah, and we know that China's been buying, no pun intended, but boatloads and tons of South American supplies. Obviously, their crops hitting the market. Again, lower acres, and really, we're domestic user now of soybeans, at least we're trying to be, whether we're exporting soybean oil, our exports there are through the roof, and, we're trying to export meal, that type of thing. So yeah, I think the soybean market has got a lot to decide here, and really, it's definitely has the potential of chopping around also until we see what our growing season turns out to be like.
Nick, any other final thoughts? Any other key markets across the grains or livestock or the outside markets that you were paying attention to here this week?
No, not really. I think we could leave it there. I think, again, getting some sales done here ahead of first notice day, maybe buying some calls, that type of thing before you get into the tractor, and kind of trying to automate some of those decisions here before we get there. Take the motion out of some of those late spring, early summer sales. I think that's the best route to move right now.
All right. Well, I know if folks want to reach out to you guys there at Trader PhD, take a look at all of the analysis and more that you guys have, they could find you easily online, social media, etc. Can't they, Nick?
Yes, sir. Yeah, you can find us on all the social media websites, or you can find us at traderphd.com.
We appreciate the insight. We'll have to have you back on the show again in the future. Nick Lawrence with Trader PhD. Thanks for joining us here today on Market Talk. Have a good weekend. We'll talk to you again soon.
Hey, thank you.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.